Hello, welcome to this week's How's the Market, Pensacola. As you can tell, I'm not normally in my normal spot. Instead, I'm here at the office where I work. And we are looking at what's going on with the stock market today. We have halted trading. I haven't seen this in a long time. Looks like we halted trading. Now, what happens is if a market drops more than 7%, this is one of the safeguards that were put into the stock market. If it drops more than that, it will be a 15-minute hold. Everybody go, breathe, breathe. If it drops 13% after that, after we come back on, if it drops 13%, not 13% additional, 13% total, there'll be another 15-minute halt. Breathe. That also helps with some of these flash crashes, because as stock trades get traded, what happens is somebody, let's say I'm sitting here in my E-Trade account, right? And I say, well, if my Disney stock hits here, sell it. Well, as it starts to fall, you've got so many of those computer inputs that it just keeps dealing with. That's why they inputted part of this, or partly why they said, at these price points, we will stop. So if it drops 7%, which it did, I haven't seen a 15-minute halt in the stock market in a long time. If it drops 13%, there'll be another 15. And if it drops 20% total, they'll shut it down for the day. They'll shut it down for the day. I don't know if that's going to happen. I was surprised to see a 2,000-point drop. We'll see. All right. There's a lot going on when it comes to coronavirus, when it comes to the Saudi and the Russian oil war. The oil is probably going to drop drastically. I know this is the Sunshine State. So here in Florida, we're going to see gas prices probably go down during spring break. Of course, the fears of corona may stop people from traveling. I don't know. There's a lot of fear-based trading happening right now. What does that have to do with the real estate? Well, if you haven't watched my video of what's happening in the convection cycle that we're in, go back and look for that. Okay, it's called a convection cycle. And in a 15-second nutshell, basically people are moving out of equities stocks. They're moving into treasury bills, but treasury bills are paying so little that they're now having to move to something else safe, which is mortgage bonds. Mortgage bonds are actually under 0.5% now. Under 0.5%. What does that do? Does that mean that my rate's going to go down, or is it a good time to refinance? The rate may go down. It may be a good time to refinance. Who knows what's going to happen tomorrow? There's a lot of fear-based trading happening right now. So fundamentals are still in question. You look at companies like Zoom. Zoom is a platform where people meet digitally. It's going crazy. That thing's going crazy. It's skyrocketing right now. Clorox. My wife always laughs that we should have bought Clorox 2 weeks ago, 3 weeks ago. She was right. We should have. So there's things that are going to happen. Some of the conferences that are being canceled are going to have economic impacts on numbers. So if you are a fundamental trader in the stock market, then these are going to affect the fundamentals in the short term. Now, in the long term, do I think that we're going to hang out here at 23,000? No. I think we'll actually rebound quite a bit. But in the short term, how do you take advantage of this? Well, I think partly you can take advantage of it by looking at mortgages. If you're looking at buying a property, this is the time to do it. If you're looking at selling a property, this is definitely the time to do it. We're going to go over the numbers in Escambia and Santa Rosa County here in just a second, because rates are going to be in the threes for a bit, which means people can afford more. And I'm talking all price points, not just 100, 150, 200. I'm having conversations with people that, I was having a conversation with my partner at Alabama broker for the Remax that I'm at, and he had somebody that was looking at $1 million property. And then we realized that banks are almost giving money away at 3%. He's now looking at $1.5 million, because you can pick up more property, and the money is almost, it's not free. Obviously, there's still 3%, but that is nothing. It's almost like a CD, right? Although I wish I could get a CD that paid 3%. Anyways, I'm not here to talk about just financials, but that's such a big aspect of what's happening this week with this crash that's happening in the stock market today. And again, who knows what's going to happen tomorrow? But with the crash that's happening in the stock market today, what's been going on with Saudi, what's going on with coronavirus, all of that is culminating in an opportunity in the real estate world. You are not seeing real estate drop 15% like you are some equities. 20%, 30%. I've seen Disney stock drop from 148 down to 108, I think is where it's trading at right now. That's quite a bit. I didn't see any of my real estate portfolio do that. So let's take a look at Escambia and Santa Rosa County, see where our numbers are. Let's go. I'm a man on a mission. My mission is to help people break through all the noise out there and
Don't need no permission.
I want to help you get to actual truth. Don't you just want the truth? All right, so this is the first time you've ever watched this show. I always start off with this slide. It says if you have between 6 and 7 months worth of inventory, you have a neutral market. If we have greater than 7 months worth of inventory, it's a buyer's market. Less than 6 months is considered a seller's market. What the slide does not say. I really should get this fixed to where the slide actually says it, but this is kind of our intro. If it's greater than 9 months, it's a hyper buyer's market. It's less than 6 months, it's a hyper seller's market. What does all that mean? Well, right here is Santa Rosa County. Santa Rosa County right now on the left is the purchase prices or the list prices. On the right is the month's inventory. So that tells you whether it's a seller's, buyer's, neutrals, hyper, either way. Everything under 400,000 is a hyper seller's. Really everything under 500,000 is a hyper seller's. But that 4 to 450, the report's being skewed by that $15 million listing that's wrong. So when the report got ran, it was just wrong because it said the original list price was there. So we don't have as much inventory here, but everything under $500,000 in Santa Rosa County is a hyper seller's market. 5 to 550, pretty much a hyper seller's. So if you've noticed in Santa Rosa County, we've had everything under $500,000 as a hyper seller's since before Halloween. Now I know this report just calls the 4 to 450 a seller's, but yeah, it's all hyper sellers. But even the 5 to 550 now looks like it's creeping down to a hyper sellers. It's been a sellers for a bit. But look at this. The 550 to 600, just like last week, is a hyper buyers. So when you call me and you have something to talk about at 550, we have to figure out which bucket we're going to be in. Because you market differently when you're a hyper buyers than you do when you're a seller or a hyper sellers. If you're looking to buy, man, if somebody was buying something right at 550 and I represented them as a buyer, I would be trying to argue this bucket right here to where it was a hyper buyer so I could try and represent my buyer to the T. But if it was a seller, if I represented the seller, I'd be arguing this bucket. So this is one of those freak points right now that's been this way for a couple of weeks, but I wanted to kind of bring it up again. Let's see, 6 to 650, just slightly a buyer's market, almost a neutral market. And then 650 to 700, definitely a seller's market. Definitely a seller's market. You're right in the middle. It's not a hyper sellers, but definitely a seller's market. 700,000 plus, your ultra luxury in Santa Rosa County has got creeping up on a year and a half worth of inventory. So there are 52 active right now and only 14 under contract. Okay. And there's just inventory there. We've got 21 that have dropped off the market. So there is just inventory there at that price point in Santa Rosa County. Let's take a look at Escambia and see where we are. Escambia County, everything under 250 is a hyper seller's market. And it really should say everything under 350 is a hyper sellers. But according to our definition, if it's not under 3 months, it's not a hyper sellers. But these two are right at 3.3, 3.7. So everything about under 350 is definitely a seller's market. And I'm seeing that. I got a property that we put under contract at this price point right here. And sure enough, we were only on the market for a couple of days. And boom, and we got full price. Okay, I put a property up in this price point right here. Just went under contract today. Okay, and I was on the market for probably 72 hours. It might have been 96 because there was a tenant there. So it took a minute to actually get in and see it, but full price. So as sellers, that's what they're getting. And I've had people call me at this 250 mark, right? And say, hey, I want to offer 220 or 230. And it just came on the market. And I'm here to tell you, you're just not going to get it. You're not going to win that property because sellers know that the 250 to 299 is a hyper sellers or very close to a hyper sellers, and they're getting 99% of what they're asking for. Now, if somebody said, hey, I was at 245, they give me the full 245. Did they ask for some concessions on closing? Sure. But that's 1 or 2%. Okay, cool. That makes sense. My seller was fine with that. But this right here coming in at, if we're listed at 250, you offer me 220. Excuse me. And you offer me 220. It's just not going to work. It's not going to work. So everything under, 350 to 400 looks like it's a seller's, but that's creeping up to a neutral. And then it's kind of funny that 4 to 450 is a hyper sellers. And I think what that is you've seen some stuff that should be in the fours come down here into the 395 and 399, which I want to address that real quick because I've had some sellers ask me about this. Should we come on it, 399 or 299 or 295 or 290? I hate when you get that close to a point. And let me tell you why. It's all about marketing now. And when people search for properties, they search in brackets. Let's say we're worth $400,000. And I've had somebody say, well, can we come on at 405? Well, we could, but here's what's going to happen. There's going to be people that are searching up to 400. They're not going to see you. Now, the people that search from 400 up to 500, they'll see you. But don't I want both? I mean, if we come on at 405, would you take 4? Yes. Well, then why are we excluding them? Now, I know the argument back is, well, if we come on at 4, then we got to take 399, 398. I want to take 4 flat. Okay, I understand that. And we can have that conversation, especially if you're at 400, because that's a hyper seller's market. We're having the same conversation at 560 or 550, where we are a hyper buyer's market. It's going to be a different conversation. So I'm hoping that makes sense. We've got a little bit of everything in Escambia County. The 450 to 550 is practically a neutral. I know it shows buyers and it shows over 7, which would be sellers. They're real close to that 6, so that's a neutral. 550 to 600 is winding up being a hyper buyers. There's not much inventory between 6 and 650, so that brings it back down to a sellers. And just like in Santa Rosa County, 650 to 700, we got 10 months, so that's a hyper buyers, and we got a year's inventory for the ultra luxury in Escambia County. Buying is different at these price points. Selling is different at these price points. Marketing is different at these price points. That's why I do this show every week, so you guys can understand as you're looking, taking advantage of what's going on with the bond market and the mortgage market right now. But understand that that's working in the buyer's favor and a seller's favor, because the seller can actually get a little bit more when you start coupling these inventories with lower interest rates. They can afford a little more, so you may be able to push the values up some. We're not anywhere near 2006 peaks. You know what I mean? The mortgages are still difficult to get, and I say that hesitantly because I say they're still full documentation. We're not going to wind up doing, liar loans, and that type of stuff, it went away. And if you look at the amount of people that are underwater and about people that are able to get the loans still, it's much, much lower than what it was in 2006. But there is an opportunity here. In 2006, if you looked at the rates were in the 6s. I know, I owned a mortgage company. Rates were in the 6s. That's what happens. Now you're in the 3s. You've just got an opportunity here for both sides. Whether, hey, I was thinking about selling this maybe next year. Well, you may want to look at doing it now. So when this stock market and all this other stuff, along with the fear of the election, which is an election year, so we know every time I've done 7 presidential elections, I know there's a fear that comes into the market. All right, but all that's going to pass. And if we start talking about next year, rates may go up and people can afford just slightly less. So you may be doing this little drop from 450 down to 440. Or, from 500 down to 475. So you have an opportunity as a seller. You have an opportunity as a buyer right now to take advantage of it during the spring buying season. School's going to be out by the time. If we wrote a contract today, I'm writing contracts right now that don't close till after school ends. That's a longer contract. Most contracts right now are 30, maybe 40 days. Okay, so the one I wrote that closes at the end of school year, which is end of May, is 65, 67 days. But it worked for both the buyer and the seller because neither one of them wanted to pull their kid out of school the last 4 weeks. And they couldn't drive them because one's moving from Birmingham. So it's kind of difficult to move in and drive them from their house in Perdido to Birmingham. That would be difficult. Anyways, take advantage of this stuff right now. Give me a call. You got any questions, give me a call. We can just chat. I can just let you know what we're doing here, what's happening here at the beach, what's happening in Escambia and Santa Rosa County. Hey, I'm thinking about selling this. Could I get this for it? I had somebody call me the other day. They said, hey, if I could get this for it, I would sell it. I looked it up, and it's only about $5,000 over what I think the true value of that property is. So I told him, I said, let's put it on there. I mean, you're not, if you're $50,000 over, if your desire is $50,000 over, I'm the type broker that's going to look at you and go, now is not the time. Now is not the time. Let's have a conversation maybe next year. Maybe the following years. It may be 3 years. guess what? I'll still be doing this. So let's have the right conversations. But some people are thinking or do not realize how much equity they truly have in a property. That's what's kind of scaring me some this past couple of weeks, is there's people that do not realize how much equity they actually have. Now you couple that with lower interest rates and looking here at some of the supply, man, you have got an opportunity that I just do not want you to waste. This whole recession thing, and I'll put the link in the notes to where I predicted this, and a recession is not a bad word. It just means 2 consecutive quarters with lower gross domestic product. But I predicted this in 2018, along with a lot of economists. It was one of my most downloaded podcasts where I talked about, hey, a recession's probably coming, but you know what? Out of the last 5 recessions, 3 of them real estate went up. 1 of them real estate went down less than 1%. It was just the last one, the housing recession, where real estate went way down. So people are thinking differently. Everything's pointing to us having a recession. Just 2 quarters. I'm not talking about a depression, just a small recession. And housing going up because we have inventory problems. We have an inventory crisis in both counties right now. So if you're even kicking around the idea of selling, give me a call because I can get you some stuff. All right. I really appreciate you guys watching. Keep an eye on the market this week. It's going to be a bumpy ride. That's okay, though. You got opportunity that you can take advantage of this bumpy ride. Where other people are scared, you've got opportunity. So let's do it. Thanks for watching. Have a great week.
I'm a man on a mission.
My mission is to help people break through all the noise out there and
Don't need no permission.
I want to help you get to actual truth.
On a mission.
Don't you just want the truth?